Welcome back. Market mastery is at hand. The 1 hour you need to master these markets and make more money than the investment advisor that's trying to rip you off. I think it's that simple. We've come correct with quite a few picks recently. Today, we're going to give you yet some more analysis on those picks. We're going to cover SPY. We are going to map out our two options trades, both bull and bear, so you can make money on the volatility. We will then get into Tesla, talk about that chart and what's setting up for a big trade in the future. And we will also cover NVIDIA and DigitalOcean, both of which might be back. You'll have to wait around to find out. So welcome. How you living?
Doing good, doing good. Finally, some quiet today after the massive week of volatility we've had. I've got to say, I don't think my heart can handle another week that we had last week of just what was like a 5% move. It was just freaking nutty. But yeah, I'm doing well. I'm surviving.
All right, well, let's get into it. Let's break down the SPY for you guys right here, right now. Again, these are the two options trades that you need. And I would agree with this. Look, you're already getting some love from CEO Watchlist. Bada bing, man. They love you. They can't get enough, dude. Can't get enough. I love that.
Appreciate it.
We're going to get started. Options watch list. Beautiful. Let's get this up there so you know what you're looking at. So again, Shay talked about that big move to the downside. I mean, we went as low as 510. Buyers ate that up in an instant, scooped us right back up. Wouldn't necessarily go as far as V-shaped recovery because I don't think we've had enough time, but about as good as it gets when it comes to a huge drawdown like that. We are still in bearish territory and need to be careful, and thus our first trade is going to be a put option on the test of our upcoming resistance, putting us at right about 535. So we're going to break this chart down to the 15-minute. We like to have a good understanding of the levels we're looking at. I think the 15-minute gives us that. As you can see, we are currently range bound, meaning we are between these two pivot points that are very important points on the S&P that you absolutely have to follow. Now, that being said, it does not mean that it can't go beyond these points, but I will tell you more often than not, it abides by these as if they were written in law. So we drew down. Shay, if you want a real quick minute before we get into the actual trade, I mean, what were you seeing as far as that drawdown, and how do you feel with the reaction to it?
Yeah, so I mean, some things on the drawdown. I mentioned I was on vacation during this drawdown. Awful time for a drawdown to happen because clearly my focus was on the market and not with my fiance. So once I saw like everything that happened Sunday night, Monday morning, I saw the VIX explode to 64. I was like, all right, this is a generational buying opportunity because the VIX doesn't just explode in the 60s every year. Like it happens once a decade. The last time it happened was COVID. And now I'm saying COVID is a different story, but it happened. The highest that VIX got to COVID was 65. This last week it was at 64. It's like, all right, this is not this yen carryover trade is not as bad of COVID back 2020 when nobody knew when the world would open up again. So I was like, all right, there's some fear and I think it's oversold. So I went hard on margin, like really hard. And I don't believe in margin at all, but I went really hard on like 20 to 25% margin, knowing that this FUD is going to get bought up because there's a ton of fear right now in the market and there's trillions of dollars still on the sideline waiting to kind of just participate. And it's exactly what we saw. So because of the VIX being like the indicator of like, all right, I think the worst is being priced in right now. Something is happening that's like, I can't tell, but this one benchmark alone will give me the green light to do what I needed to do. And I initiate positions in two names that I've been wanting to initiate in quite some time. So once that occurred, I was like, all right, I'm not going to be adding anymore because the VIX was slowly starting to fade to the 40s, to the 30s. I want to see if the SPY would recover on their 21-week EMA, on the weekly 21 EMA. Like that's my favorite go-to metric for the rally we've experienced the past 8 months. Once that occurred, I was like, all right, I think we're in the clear. I'm not going to be as aggressive in my buying. I'm not getting defensive because we just had that V-shaped recovery. But like Oz said, like I'm not as confident in that V-shaped recovery because it's still a lower high. That rug pull we experienced kind of happened with Breeze. We're entering a seasonality weakness period of end of August into September. I do think that there is real recession fears right now happening, like in the job numbers, consumer discretionary spend. Like there is actual fear where I think we all experienced it anecdotally of like consumers are struggling. Like it's not as rosy as the stock market might indicate of hitting all-time highs. And now I think you're starting to see it kind of correlate a little of like, oh, it's consumers actually struggling and there is a crack in the labor market. I think and you saw the 10-year yields just spike down to under 4%. I think the fear of like, oh, will the Fed's cut rate is going to be soft landing went straight into, are we entering a recession? If so, we need to reposition our portfolios to factor that in. And I think that's what you also saw, a lot of repositioning. So that's exactly why like small caps have not been catching a bid, because the recession fears is a no-go for small caps. Even though rates will get cut, they're going to be more profitable with lower interest rates. But I'm telling you, the guppies, the small fish will not be able to survive recession like the big dogs can. So that's why you're not seeing IWM really catch a bid as much anymore.
Agreed. And after this, and I'll give you a minute to talk about it while I'm going here, is do you see this as a change in character, which is the real question. So nope, you got to sit on that for a minute. I know that'll get you fired up and going. So you guys are welcome for doing that. What's interesting here is like if we focus our eyes right here, we actually saw pretty significant strength coming off of our 20-day, which has been kind of our guide for the last couple of weeks. We've been just following these ranges up and down, back and forth, and we've been waddling between the two, straddling it almost without really choosing a direction short of that one big day where everything's sold off. So there's really two outcomes that I think are going to materialize from here. And I actually take back what I said, because I think the bullish trade is going to be more likely going into tomorrow's market, seeing how strong we closed as far as volume goes. Even though we got washed out 535, which is why I was originally looking puts, we cleaned up right here. 531 and change twice. That is a pretty significant sign of strength in a short time frame. Keep in mind, these are day trades. These are not meant to be long-term swing positions. These are not near expiry, but they are not, they're not leaps. So we need to be very careful when we trade options on this. But that being said, I think that we can pick up and get an open around 533 with some strength tomorrow. And we actually will probably test, I think before anything is done, said and done, test 535.20 right here. And then if that goes well, I think we're just going to head right back up to 536.34, because as you can see here, we are trending right in that direction right now. At least if you look at the 15-minute over the last couple days. With the SPY, I very much so care how the last 2 or 3 days have read out as a whole, because that's giving you a pretty clear direction on the short term of what the more medium term move will be. So that being said, I think we're actually going to flip the script and we're going to go calls here. As our first trade, we're going to map out. Now, again, these are all following these levels, guys. Every single one of these trades follows these levels. They are not meant to be taken outside of these levels in any capacity. So I want to make that very clear and understood. We're going to flip over to the options chain here so we can get a closer look at what contracts we're looking at in the bullish trade. So as always, for those of you that follow the stream, you know that we are going to go ideally 18 to 21 days out. We're going to choose 18. That puts an August 30 expiration. For those of you that have been following this, we have produced from this stream over 51 consecutive weeks of winning options trades to the tune of 100% plus ROI at some point during the week, which means these true trades I'm giving you at some point during this week, there's an extremely high likelihood that one of these will produce 100% return. So if you're following the levels and you have everything set up, you should be making money. So we are looking at, wow, these premiums are still so inflated, dude. This is unbelievable. We're actually going to have to go closer to expiration, which is tough. But these premiums are just too much to handle. The risk isn't worth the reward. Even then, we might have to open a spread. This is crazy. So I guess, yeah, we'll just have to go with it. This 36 calls. Sorry, what?
To give all the listeners more context on why the IV premium is expensive, like go to the VIX. The VIX generally trades between $12 and $15. That's usually the mean of the volatility in the market, and these premiums are directly linked to the volatility of the market. The market's highly volatile. The premium is going to spike, and it's going to be less profitable to make money on the upside or downside because there's a ton of volatility in the market. So it's not going to be as easy as like everything's getting normalized during like the summer months. So because of that, it's a lot more difficult to make money on options. That's why what Austin's talking about is buying spreads. Like right now, the VIX is at $21. That is technically a 40 to 50%. I wouldn't be surprised if these premiums are like around 40 to 50% more expensive than what they usually are. They are. That's the one benchmark. Just look at VIX to figure out if you should be buying options or not. That's like why I love the VIX as a benchmark, just because it has a hand on so many different things in the market. It gives you directionally a good insight of like what's happening right now on the Greeks, on the upside, downside targets, etc. So I want to add that color, and we'll pass back to Austin to see what kind of trade he's going to make.
Yeah. So in looking at this a little more closely, guys, this is going to be tough. So these might be out of reach for some of you. We're used to seeing, as he said, I would say 40 to 50% is it might even be the low end. These contracts are usually trading at $200-300 a piece when we're going $3-4 out of the money. So you're looking at basically 100% premium to what you're paying before, with implied volatility below 10. So that's partially the reason these deltas should not be this high. Another reason is because these contracts, if you look at the SPY chart, for such a long time, for months, these contracts were on 530 strike on the bull side calls. These contracts were in the money for a long time. So they had to de-escalate those premiums, but there's not going to be liquidity for them as there was before we reached it, because so many contracts have already been either bought, sold, or exercised. So when looking at this, that's another factor here that's really just out of our control. So I guess we're looking at the 536. One strategy you can leverage, if you see I'm on Robinhood, to make this simple, it's not the best platform, but it is easy to show you what to do. We went to buy and we open this up, right? Buy, so $600. We click sell and we find the strike directly above the one we just selected. So it'll show us right here. Okay, we just did the 536, checked. Then we go to 537 and we click the sell, lowers your cost to 58 cents. What you can do, and what I think would be actually pretty intelligent in this market, is to go 540, creates about a $2 debit, so $200 per contract. However, here's the cool thing. Since these are a little closer expiration, it lowers the cost and thus the risk, but it also does something else important. It takes that premium and decreases it to make it more affordable, but it also accomplishes this. If 540, if we're going to go back to the chart here, 540 is a very critical level, and this just hit me, and this is what we should be doing, to be honest. I can't believe this just hit me. But as you can see here, 540, that's why this line is that it's one of those thick white lines. 540, as you can see here, is a very critical level, important level, meaning it's going to be difficult. This is our point of confluence, right? This is our trending resistance, and this is our horizontal range. It is going to be very difficult to trespass this 540 level and break above it with strength. So what we can do is we can sell the 540 against our 536, which would be awesome, especially if we go to 536, 537, because once that 536 gets in the money, it's going to escalate very quickly. Because that 540 is an unlikely mark to hit, that contract will not increase in value as quickly, which means you'll actually capture more of the spread. So I actually really like that. I'm going to type that out here in the chat for you guys. It's buy to open 536 call, sell to open 540 call, creates $200 debit spread. So it means you're still betting to the upside. However, you're getting that, I guess, added protection of selling a strike that is unlikely to be in the money. Does that make sense? Does that make sense to you? Explain then?
Yeah, no, it makes sense. I mean, also keep in mind, like, there's major catalysts this week. We have CPI and PPI next 2 days. So like there's a lot of volatility factored in this week. Yeah.
All a week. So in short, from a longer term perspective, if you see us violate 540 to the upside and you get confirmation, I am going to be going long. That's going to be a Discord only premium trade. If you want to get in there, again, join, you'll get it. But I will be crafting a longer term, I'm estimating 100 to 200% winning trade on the options chain with the SPY should we break that 540 level with confirmation. I will be posting that in the channels for those of you that are following us on the premium side, you will be getting that. So that's our bullish trade. Let's look at what a bearish scenario looks like. Not that much different. So we're going to go back to the 15-minute. I don't like the initiation of any bearish trade right here, right now. This trade is going to hinge critically on a few things and a few levels. Where's that little... Yeah, where's that little bastard so I could change the color? Where the hell is that thing? Whatever. Our bearish trade will be initiated if we break above 535. So if we hit our heads here, that's going to be trade one. Not as valuable as the other one. So let's go into the other one. Okay. We don't want to trade that range, especially when we're trading upside, because what'll happen then is we can get caught on the wrong side of that trade, and nobody wants that. So instead, what we're going to do is we are going to watch for a break below 531, a test up, can test twice, and then a rejection, because I think that's going to open the door for pretty significant downside that we could see going as low as 528 on the retest. So where would I initiate this trade? Right about here. Oh, shit. Sorry, that didn't go across straight. Right about here. So if we break below 532.5 and we come back up and get rejected again below this moving average, okay, below this moving average, I'm going to publish this chart to TradingView so you can actually go look at it. Porter, I don't know if you can. If you can publish it right now, that would be awesome. So it saves it as is. That would be cool. And then post a link in here so they can get it. That would be really awesome. I don't know if you can do that if I'm logged in. Anyway, we break below 532.5. We test up. We fail. I am going to be looking at the 529 puts. Now we're going to flip back here to this options chain so you guys can see exactly what I'm looking at here. We are going to exit these out. We're going to flip over to the put side. We're going to maintain that same expiration of August 23. We are going to go to, we're talking 531. So 531 trading for about the same, little bit higher volatility. So we're going to do the same thing where we buy here, then we go to sell, and we go to, let's see, we go to 528. Let's go $2 out. This creates a $100 debit, so $100 risk. I don't see us going to 528 or getting in the money, but this 531 will be in the money as we go back to 529. So you should be $2 in the money, which means this can escalate pretty quickly and make you a good amount of money. That being said, I am not going to initiate this trade unless we break that critical level. So I'm going to type this one out. Buy to open, put, sell to open. Okay. Put only. Below, what did we say? 5. What was that level we were talking there? Is it 532.5? So, bada bing, bada boom. That's what we're going to do. That's our game plan. Now it's all mapped out so that you have it. The trades are there. If you want real-time updates on these trades, again, you can get them in the Discord. You just got to jump on in. It's always been available. Maybe you just didn't know it. But that's our levels we're going to follow on the spot. So now to the question that I've been also wondering about your answer since I asked it. Do you see any sort of change in character?
No, I don't. As surprising as I think, I am surprised of how quickly something can turn. But if you look at the volume last week, like, you can't ignore that. And if you look at every single time you violated that 21 EMA on the weekly chart, within days it recovers since this rally started. That's just validation. Like, there's so much appetite for this bull rally to continue that every time it violates that key trend, it gets scooped up and bought and recovers it, and then business as usual. You go trend up to the right. Like, I really do think we're gonna hit a new all-time high this year again. Like, I really do think so. If that's my belief, I'm going to continue with my strategy like I've been all year. I'm actually going to expose myself to the clear winners of 2024. And that's exactly, I took last week's dip opportunity in that. I'm like pretty heavy in NVIDIA right now. So I'm really excited. And to answer your question, I don't think it's anything different. Clearly with the price action, the V-shaped recovery we experienced.
Yeah, 100%. And I mean, again, that inflow is pretty substantial. And also keep in mind, which we won't go too far into it, not to say it's conspiracy, right? But interesting that all these brokerages just couldn't function on the day in which a prime time buying opportunity has emerged. I do think it was liquidity protection to the downside. They're like, I don't want anyone getting out. But it's like, hey, let's help the people. That's what these guys in a boardroom thinking about. Let's save them. Let's save these people. And I guess we could buy a little bit, right? I mean, we could buy a little. Who cares? We'll buy a little bit. No one will ask questions. It'll be fine. And they got like an instant snapback, double your money, double your fun with absolutely no risk. So
yeah,
win some, 100%. You lose some. So moving on, did you want to dive into NVIDIA first?
Yeah. So NVIDIA, it was tricky because there's a lot of things that occurred in NVIDIA the past week. Geopolitical tensions, no bueno for NVIDIA. B, Blackwell chips are getting delayed. What's that going to be for the second half of this year's earnings? Also, like Super Microcomputer, ticker SMCI, like they reported their earnings and they literally just essentially said that they've gone no Blackwell volume. So that's a validation of like it is getting pushed back. It's not just rumors. So people are like, oh my God, are they now going to like everything we expected for the next 12 months? Is that going to get pushed back in a way of 6 months? And it's just going to be like, meh growth for the next 6 months. And there's a lot of worries because NVIDIA has a cyclical label associated with them because they're in semiconductor space. And I just loved it because it was just FUD. Again, this is all just creating something out of thin air. There's no proof of anything changing. And the only proof I've actually experienced is every big tech company exceeded their CapEx estimates. Every single one spent more on CapEx than what they anticipated. And again, like Wall Street didn't love that for themselves. Like all those, like the Microsofts, like the Metas, Amazon, like they didn't love that they were spending more on CapEx because it hurts their earnings. But it's an amazing thing to see for NVIDIA. So I really do think NVIDIA is going to have an incredible quarter in 2 weeks. Biggest question is guide. There's a ton of things that might have to be factored into their guide. Blackwell delay, geopolitical tensions. So those two things are like, how much is that going to be factored in? I'm anticipating it's going to be 4 straight quarters of dominance again. Nothing will change. If that's the case, it's going to retest those all-time highs. It's just going to. Yeah. And you're seeing that run-up already occur, that earnings run-up that NVIDIA always usually has, like weeks before they report their earnings. They're just like, they're going to continue the dominance party as usual. They defend that 105 level, which was huge. They're at 110, up 5% today, where market was essentially flat. I just think the run's going to continue slowly but consistently for the next 2 weeks. And depending on what their guide is going to be, this might just break 150. And then once it breaks all-time highs, that's my favorite time to get into a trade because, ceiling's like open now. It's up. We'll see where the stock actually takes it. So, again, NVIDIA, it's a blessing. You guys were able to capitalize that in the week. Crazy. It went from $90 to $110 in less than a week, and it's a $1 trillion company. Absolutely wild, but that's why you got to have your conviction list. Like Austin and I talk about all the time. Have your names that you absolutely want exposure in your high conviction list. So when there is those macro-driven sell-offs, you don't have to figure out, what should I buy? What should I buy? Where should I go? Like you have your plan. You have your list. I had my 4 names I wanted exposure in. If there's any kind of macro-driven sell-off or there's some kind of earnings gap down that nothing was thesis breaking. I had that list. So I was able to scoop everything up right away. And luckily the brokerages were still open when I did. And I was able to get all the names I wanted to. I got the Palantir, I got the NVIDIA, I got the Amazon, etc. So like have a list. And this is exactly why we preach all the time, because of moments like this where you have to pounce as quickly as possible and you'll benefit from it in the long run.
Yeah, you nailed it. I mean, it's just being prepared for when the moment comes. Let me ask you guys this, okay? How many of you, I'll ask two questions. Number one, for those of you that are like 35, 40, right? Or older, how many of you wished would have made some different decisions to make 100 grand available in 08 when everything crashed? Whether it's real estate or the market, right? And then COVID. I don't know about you, but like I panic sold some good names like a dummy. How many of you wish, like that you had, a good amount of money to throw into the market then, right? Like it's always forward looking. A hindsight bias is 2020, baby. So the question is how prepared are you going to be for the next draw? We just got one, right? How prepared are you going to be for that next opportunity that is, again, could see unprecedented highs like that? SPY 560, we told you back in, beginning of the year, we're like this SPY 560 this summer, it's happening. That was counter to what everyone else said. You only heard that here. No one else was talking about it, even being possible. We stamped our fucking name on it, said, you know what, it's very possible, and we think it's going to happen. And then look at that, sure as shit, there it is, 560 in the summer. So the question is now is like, what are you willing to do to be prepared for what comes next? And I think NVIDIA is a good example of that. Record earnings, great. I mean, prediction of what, 28.6 billion in revenue. I mean, just like psychotic numbers. The question here is, NVIDIA has had such an unprecedented run. Is the market trying to price in a record beat or a beat? Because at this point, everything's exponentiated, right? Like good earnings is no longer good earnings. Good earnings for NVIDIA is a disappointment. Game-changing earnings is good earnings for NVIDIA. So it's like that's what must occur in order for this to see more upside. And just to pop that stuff back on the chart, I mean, we broke this down for you. Next area of confluence would be 127 and change before inevitably leading to 140. And then my final point is about 168. I think that's where we realistically could see ourselves in the beginning of next year. Very likely, very possible. It has showed great strength and holding up here. Again, I know it's crazy on the chart. All these fib spirals help you do is predict the time value as well as price. So for those of you that trade options, like our last, again, not to recall it too much, but that last NVIDIA options trade 2,400%, kind of can't ask more than that. And then Shay, how much that trade that you called out actually at the live event, that trade paid pretty well.
I mean, it went up 13% the next day.
Yeah. So
like the stock alone, not the option. The option, I think, doubled.
Yeah. So there you have it. The trades we got and we will nail. It's just a matter of finding the right levels and getting access to right information. So once again, if you're not in there, get in there soon, get in there fast. So you have the details of the trade ideas. But I think NVIDIA is setting up for a decent run. What we want to see as far as price action on earnings is pretty straightforward. We just want to see a recapture of this little trend area right here. And if we do, honestly, I think it's just going to go bingo right back to 140. And everyone's going, man, I should have bought NVIDIA at 90 when so this is a straight line. I leave it there for a reason, you guys. If you came to this stream, were prepared. Back when NVIDIA was trading 130, 140, you were already prepared for a buy in this zone between, I'm going to map this out, between $95 and $92. That was the demand zone we outlined for you so that you could jump in and get it. If you didn't, okay, you're scared, didn't trust it, now you know. That is the point of being prepared. Show me someone else without institutional backing or a team of quants that was sitting there ready and waiting, knowing 91, 92 bucks was possible. What did you get those NVIDIA shares at?
92.50 is my average
cost. Case in point. They're prepared. You just got to listen, you guys. That's the point of why we're here. You need to make some money. So that's NVIDIA. Let's keep it moving.
So, before we, other comment on NVIDIA, and we're going to move on. NVIDIA is the type of stock where a lot of the information you need is already out there through sympathy plays. Because NVIDIA has their hand in every single thing across the world. You can get a lot of pre-reads between what other companies report. TSM, Taiwan Semiconductor Manufacturing Company, they just reported their July numbers end of last week. July revenue up 44% year over year. Okay, so demand is flying still in July. Pre-read for NVIDIA, because everything in TSM goes through is essentially NVIDIA goes through TSM. So that's a pre-read. Great. Super microcomputer guided up by like, I don't know, $4 billion just last week. Where do you think that demand is coming from? They're selling more. It's just NVIDIA has to be selling GPUs in order for like a server company to exceed their guidance for revenue. Like there's pre-reads all around, and we've gone the past week. I really do think this NVIDIA bid is from the TSM July numbers, because TSM is a monopoly in the semiconductor space and packaging manufacturing. So I think that's like the easiest one-to-one connection to NVIDIA. And that's up 40+% year over year. Things are actually going to be better than expected, in my opinion, for NVIDIA. So like, again, NVIDIA is just such a massive company with their hands in so many different pockets of the world, where you can get a lot of information of their earnings from other companies reporting. So I want to call that out.
No, I love it. And I think you're right. I mean, just to kind of validate what he's telling you here, it's a monthly chart on TSM. It has just picked up, caught a huge bid here. Very gentle touch off that 13 EMA on the monthly chart, which I would argue high degree of accuracy, even more so on our SMA here. It's just ridden it like a wave, and now it is projecting touch all-time highs. So there you go. Not even overbought yet. That's the psychotic part about this chart. Not even really venturing into true overbought territory. 70, yes, but I think names like this, you saw it. You saw it back here. What is that? As high as 90 on the monthly RSI. Monthly. That's insanity. This goes to show what this market's willing to do when there's money to spend and something to buy. So keep that in mind.
People also say NVIDIA has run up so much. It's where it's been at 5 months ago. It's been basing, and that's a huge like relief for like someone like me who just got into NVIDIA fat, of like, all right, well, it's been basing for the next leg up. It's not giving up any of those massive 2-year gains of like triple-digit growth. Like it's just basing, and the longer bases, the better the launching pad, especially on a catalyst of the earnings. So I want to add that in, but again, it couldn't be more bullish on NVIDIA.
No, and just for like I guess a metaphor for those that may not understand, it's much like running a marathon. Like you don't keep up your sprint pace the entirety of the marathon. Sometimes you slow down to actually go faster, right? To reserve your speed for the areas in which you can outperform the rest of the pack. That's what you do. And it's what happens in the market. It's what happens with these charts. They slow down, they consolidate, they build a base, because institutions can't buy billions of dollars worth of a company all at once. It doesn't work like that. They have to carefully manipulate the market so that they can accumulate, which things to look at. What is accumulation? Great question. It would be higher than typical volume without greater than typical price volatility in the direction of their trade. So for example, if someone were to say be acquiring shares of NVIDIA or shares of Tesla, they would be slightly outsizing the sell demand with buy volume, but they wouldn't allow the price to really go anywhere.
Show up the Rocket Lab chart. We can show accumulation between April.
Well, I think you're missing the hint I'm giving here.
Oh, my bad. Might be.
But you're right. I mean, we can. So that it might be a more clear-cut example.
That's right, because it's just so like insane that like the stock price didn't go anywhere, but the volume you can see it was just massively above average.
This is actually this is a perfect example. You're spot on. So look at these days in particular. You're talking 272 million compared to what's their average? So you're talking 2.5x relative volume. Huge. That's a huge number. On some of my screeners, I programmed them to like 1.35. This is 2.5. And you can see low volume here, boom, price goes up to 8. Triple the volume here, and the price doesn't move at all. So he's spot on. Again, another trade, just saying. Kobe gave it to you. What do we say? 375, give or take? It's at 539.
Yeah.
And it held up through that volatility. You didn't even lose your gains on that massive, merciless day. I'm loving that. And we'll get to the other one that's playing perfectly from our Friday stream next. So again, Tesla, you're seeing something similar, right? wherein, oh, these circles don't stay. That's annoying. Wherein you see huge fluctuations in price. Look at this. Tesla went 260 to 375 on children's volume. This is like a children's ration. Yet here we are buying in bulk, and we're barely seeing a move half that size. And then once again, we are picking up significantly here. Now, this one did give a little bit of a run, but it gave it all back. So another case in point right here. You can see it on Tesla. Barely moved, but buy volume like outpaced sell side significantly. So the question is, oh my God, I'm so going to shoot myself. I forgot to put the Tesla thing up on the chart. Oh man, that sucks. 1 second.
Speaking about Tesla, I mean, Elon's about to interview Trump in like, was it in less than an hour? It's gonna be a fun one. Watch crypto and watch Tesla stock price during that interview.
Could be wild. I agree. Couldn't agree more. So again, Tesla, the question is it dead or lying in wait? I would venture to say the latter. I do not see this dying anytime soon. I think it kind of encapsulates a bigger movement than even what the stock or the company itself can manifest into something real. So you got to keep that in mind. Again, there's a story here that's playing out, and it's on the world stage, and it's playing very well. And not to mention, it's backed by a very real opportunity of growth in a software sector. I don't know what else to call it at this point. It's a software play, always has been. So that's what I love. I also love about you and me. We were both one of the few people saying that a long time ago. It's like, fuck the cars, dude. I want the licensing fees. I want the charging stations. I want the software, and I want the pioneership, because there's also a premium to that. Like, being the pioneer of an industry allows you to kind of set the tone. So that's regulations, that's lobbying, that's all these other elements that will affect these markets that you have to take into consideration. Or I guess, better yet, you don't, because we're doing it for you. All you got to do is pay attention. It's that simple. We'll break it all down. So again, Tesla, this is our premium support here. Remember, we bought the dip here. Nope, it was right here. Wasn't it 146? We bought the dip. This is a monthly chart here, so you're getting a good indication of what time it is for Tesla. We were buying this dip 140s. We bought this dip 115. So you should have a phenomenal average at this point. Phenomenal. And we break above 204. We go to 270. We already know that. We gave that to you once. So you bought at 140, and 2 or 3 months later, you were at 268. You doubled your money effectively. Now your next opportunity is even more impressive. What I'd love to see, and I mean love to see, is a Tesla drawdown 160s. So I can truly bet the farm. I would love it personally.
Oh my God, I'd be so happy.
Because that also sets us up to hit our major point of confluence right at 203, the level that's been so critical dating back to December of 2020. These two levels are the just core pivots for this stock. Like, they are the prices. They're the centerpiece of tug of war, where institutions, retail, and everyone are fighting to death to move the price. So that matters to you, especially if you're betting on the upside, because you want to see it north of 205. Because north of 268, we've already won. Welcome to $400 a share. Now, not instantly, but over 268, again, welcome to $400 and the potential for another 1 for 10. That's where I see this going. Tesla outpaces, hits $400, $500, $600 a share. You're going to get 10 to 1 again, I think, personally, if they forward split, because they're going to always want to keep that stock price affordable. So if you look back, guys, through time, buying shares of Johnson & Johnson in 1920s, how did that somehow become tens, if not hundreds of millions of dollars? Well, they forward split the shares and gave you a bigger piece of the pie without having to spend more money, which is critical. And so I think right now, this is really a critical point where we want to watch for that 150, 160, or we watch the break over 203, and then we trade the upside. That trade will make money. It will be a banger. It will be, for everyone who's in the private room, you will get that trade. That's going to be, I think, one of our best of the year, even though we've got a few 1,000% runners on the list. I do think this one will be more enjoyable because it's taken so long to play out, and we've played with perfect patience. That's what I'm most proud of. It's like, you know how many times I almost initiated this trade, but I knew it's just not time. But soon it shall be. So that's it for Tesla. For me, you got any other thoughts on Tesla,
No, I mean,
Jackson?
I don't know if Tesla can go anywhere stock price until the 1010 event. Like, I just think it's basing. Clearly, you're seeing that base occur. Because the reason I say that, it's a story stock. All the reasons why Austin and I are bullish on Tesla isn't reflecting the fundamentals, because we love being the first ones there rather than catching that FOMO feeling. We know they're going to be, in a couple years, they're going to be known for selling rides, not cars. And we know that they're one of the few pure AI players in the market right now. Like, it's happening right now for them. So we want to front run it. I don't care if we're early. We saw a clear trend retest in 140. We went hard, and now because we got in such an early price, like I think my cost basis is 160. I'm a little worse than his, but still, there's a lot of cushion for like us to be chilling until that 1010 event, and we don't have to go gung ho about it because we got in at the right time. I just think right now, because the story stock, it's going to consolidate until we get more information about FSD and what their AI component will be.
Yeah, it's all I'm saying is, when it happens, you're going to have it. You just got to pay attention. We've done it with all of them. I mean, from Palantir to NVIDIA to Robinhood to whatever. I mean, this market is not an easy one to trade in, but I promise you this: if you pay attention, you will be on the right side of those trades most of the time, but more importantly, with an appropriate risk reward, so much so that you will make good money while you do it, even if you only win half the time. So let's get into it. I know this is one that you wanted to talk about right here, right now, and I couldn't agree more given the chart. This one poses a very interesting opportunity. So I wanted to
go on the weekly chart. It's wild if you see like all the AEMA 21, 50, what's like lining up to. It's just it's all like around $33. So anyway, to add more color to DigitalOcean, as you guys are probably really familiar with during our private Friday sessions or even in my Discord group, like, this is one of the mini monsters I'm obsessed with. Like, really think it's gonna take off to $75 a lot sooner than people think. The reason for that is, you guys, again, like I talk about all the time in a private group, like, I think SMBs are going to absolutely explode in the next couple of years because of AI. The reason for that is, there used to be SMBs of teams of 10, 15, 20. Now, myself, I could be an SMB because of all the tools that AI provides me. It could write the code. It can help me create the software. It can help me like do the go-to-market strategy. Like, it has everything I need just for myself, be able to create this new company or product because of what AI is giving me the tools for. And because of that, SMBs won't be the traditional mom and pops. They're going to be people like me. And DigitalOcean is the cloud computing platform for SMBs. And because my thesis is they're going to explode, more users are going to join the developer pool for DigitalOcean, that, all right, AI is going to be a massive tailwind for them. And right now, SMBs are struggling, like, really bad. Business spending is not great still. They're going through a severe recession. Nothing surprising, but like, you see the big dog cloud computing names, the AWSs, the Azures, the Google Cloud, like, they are just firing on all cylinders at the scale they're doing it. It's kind of wild. Like, AWS is like alone is absolutely wild. AWS alone has a Rule 40 score of 60 plus. That's freaking wild. Like, I think AWS alone would be $1 trillion company if it was just priced by itself. I really do think so, and that's the crazy thing about Amazon's valuation right now. But I'm digressing a bit. So, cloud computing is going to be a really big hot pocket in the post AI world. Specifically for me, DigitalOcean is going to be the biggest winner because of the SMB explosion. Right now, they're going to low teens, but they have 40% EBITDA margins. So I was underwriting. I think there's going to be a massive uptick on the revenue, and a lot sooner than people expect because of that SMB explosion. We're seeing back-to-back quarters finally of revenue reacceleration. So, okay, it's happening. Market, I think, just realized that in their earnings last Thursday. Like, oh, it's back-to-back reacceleration. Their AI machine learning component of their business is growing triple digits. ARR, like, they are becoming a real AI player, not just like a story stock. It's happening right now. So if that's the case, they're trading like 15 times EBITDA, dirt cheap, like dirt cheap. Like that's the kind of valuation that people are writing them off. Like they're going to get acquired PE, private equity, or some companies are going to acquire them. They don't really have a moat. I completely disagree. And that's why when you see that disconnection, that's where the real multi-bagger lies. In the past, let me pull up my notes. In the past earnings, they offered, where is it? Okay, so they offered this really, really interesting product. It's called GPU droplets. So the way this works is, obviously, if you guys don't know, I spoke to the private group on Friday. What it was, it's H100s for video. They cost 40 to 70, 40, 50, 60K a cost. Like, that's a heavy capex for someone like me who has all these AI tools. I can create my own business, but I can't afford capex of 50K or even store all that's compute in like my garage or whatever, wherever I need it. Like it's impossible. They're offering a product where you can rent as you go NVIDIA H100s. So now you can have the compute necessary to fund your fuel your business without all the capex requirements. If this becomes a common trend in SMBs, like this just launched 3 months ago, if it becomes like the norm or the default, oh my God, there's gonna be so many more users going on their platform. Their revenues are start exploding, in my opinion, because now they have the whole network of SMBs, like not just the cloud computing. They have the compute from the GPUs as well. And if that's the case, like what else do I need anywhere else? Like I can just live as an SMB, I can just live in DigitalOcean. So that's a really, I think the market is really under not factoring that into like what the price should be, but maybe it is because market's been flat the past 2 days. DigitalOcean's been up 20%, like 20% with volume. And what Austin and I were, what Austin was talking about, like accumulation, when the price doesn't go anywhere. Look at on the weekly chart. Look at April 29th to May 13th. Those 3 straight weeks, stock didn't go anywhere. Look at that volume though. That's accumulation. That's like you can't ignore that accumulation right there of just like price didn't go anywhere, but the volume, someone's scooping it up.
Look at that, dude. Look at May 6th. 12 million volume where they were averaging less than 1 million a day. This is a day. That's a 12 million right there. Notice the stock. Look at that. Look at that little doji. Stock didn't move at all. 0. Yet they had a 10x volume. That doesn't make
look at the last couple of days though. Like the volume is like the market has not been going up.
They're getting 5x volume return right now. So again,
someone's saying that AI angle. That's why.
Anytime you see that little coil, man, that's a good. This is like the ultimate bottom feeder setup. Actually, what's funny is before we ever talked about this, someone brought this chart up and I broke it down as like a way that I've always traded, which is you find like the 1, 2, 3, 4, 5 being your springboard. And that's like, this was all on the chart before we ever brought it. This is exactly it. Now, ideally, we would have seen retrace down to like top tier demand zone at 2450. We didn't get it, and sometimes you don't, but that also is an indication of even more strength. That because it didn't even go that low, the market doesn't even want to see it close to there, which means it is just a matter of time. So I kept pointing to this. Our projection is about 128% upside, and I think that that's being reasonable. Being reasonable. In the long term, keep in mind, the long term, the LT. The long term. So I couldn't agree more, man. I think that this is going to be a winner. And I think right now it's just setting up for that move. And on that note, let's talk about a winner that's already won one time, but is coming back around for second one. So I did tell them, we crafted the first trade. We gave it to you, right? It was JMIA. What is it? Like $3-4. I mean, he was talking about it at like 2 something. So you got it even better. When we started talking about it, it was $3-4. It blew up. We talked about it at 4. And then we talked about it again at 4. And then we talked about it at 6. We gave you 4 or 5 opportunities to get in before this thing ran 300%. On Friday, we broke down our new trade based on the chart right here that, again, you can get. Just join the premium room. You can get a link through Shai's bio. Go ahead and jump in there, or you can just go to the WAP page straight up. But, dude, we gave him the move. That trade's already up, by the way, 10% on equity and 15% on options. That trade from Friday. Oh wait, you weren't there, were you?
I was there. I was there.
You were there.
in
It
the
was
beginning part.
there. So yes, yes, and yes.
So I mean, again, I talked about on Friday, like JMIA, small cap investing is totally different than a normal investor. Like there's tons of volatility because people are worried about investing in shitcoins. And JMIA scarred a lot of people in 2020 and 2021. That rise up towards like, I don't know, if you it's like 70, you have to go like way zoom out. Like it scarred people. It went from like $5 to 70 within a year. Like that's, people held because again, it was references the Amazon in Africa. Everyone wants the next Amazon of some region. Everyone. But they had the worst corporate governance ever back then. Like it's a totally different company, new C-suites, so totally new characteristics of a company. But people have that memory in the back of their head of like, oh, Jumia screwed me over. I'll give it another chance because it looks like it's changing. But what happened last week on the earnings was similar vibes of what probably people experienced 4 or 5 years ago. But I'm telling you, it's different because they had good, not great earnings because of this currency headwind issue of like, if they kept their constant currency on the revenue, they actually would beat and be up 35% year over year. But because of this currency issue, they actually went down, like revenue went declined 5%. So they have a massive revenue issue. But again, this is just an Africa issue, not Jumia issue. There's nothing Jumia can do about it. They can hedge as much as they possibly can, but they there's nothing, it's out of their hands. Fine. I could care less. Mine's all about cash burn and GMV increase and declining SG&A. I want to see continue the trend towards profitability. We got that this quarter, but people were freaked out over the 20% dilution offering that they also snuck in. Where if you guys know shelf offering, they did an at the money of like potentially selling 20% of their shares in order to raise like $200 million. Potentially. Not doesn't mean they're going to do it, but potentially. I think they're going to do it fully because if you look at the volume, that's not retail. I think that's them like selling shares to raise that fund during that shelf offering. Why? So once people saw that, oh my God, they're trying to pull the rug against us again, round 2. It's not the case. It really is a completely different company. Where back then, I think their cash burn was more than the revenue. Like they made 30 million a quarter. They lost 40 million. This is different. I think they made $40 million. Their cash burn was like 7 million. So minimal. Like, yes, they're not profitable. It was only $7 million. But let's just say that they do use that 20% dilution. Solvency risk is over. They have enough cash on hand to survive. And I think that's what the disconnect is right now in the stock, where people experience an insane euphoria going up to $15. And now they're panicking and it's going back down below $5. For me, I doubled my position once that occurred. I was like, this is so funny. I thought it was funny. I get why it wouldn't be for a lot of investors, but this is why you're supposed to like portfolio management comes into place. Like even though I got into Jumia at $2 or $3, at the end of the day, when it was at $15, it was still only a 2% position for me. I could stomach the volatility associated with the small cap stock because I sized appropriately. So when it dipped 70%, I only lost 1% of my portfolio. But guess what? I doubled my position. And now it's a 2% position for me now. And I still think it's going to hit in the teens. Absolutely. Might take some time to earn back the trust from everyone else. But again, solvency risk is a 0. That alone was like, this is amazing. I wish they did the dilution earlier when it was trading at $15.
Explain that. Like solvency risk is 0. What does that mean?
Oh, they're not going to go bankrupt. They have $200 million in cash. I just said they lost $7 million last quarter. That means they have like, I don't do the math. They have 4 to 5 years of cash runway now, technically. So like, again, the benchmark analyst said they're going to hit profitability next year. Management has like insinuated that they're going to hit profitability next year as well. They haven't clearly said it, but it's insinuated. So because of that, like, I think they have enough room with that $200 million. I think they're using that funds to kind of grow to different regions in Africa. That's what I'm thinking. Or maybe they're trying to bump up their logistics network or infrastructure. Because right now, it's still the wild, wild west in Africa. Like it is. You have to hand deliver to people. You can't just drop off their doorsteps. Like it's just like, it's crazy out there still. It's like, yes, they have the benefit of being the first mover advantage, the brand recognition. They are known as like the Meta and Googles of Africa with the citizens. Like and they're only worth $400 or $500 million. It's unheard of for an e-commerce presence like Jumia in a region that's underserved and underutilized in this early innings of their growth thematic for e-commerce to only be worth $500 million. So I think that dilution risk is zero. And because of that, I could be a lot more aggressive with my investment on Jumia, because I was always worried, like, it went from 70% down to like mid-teens, 20%. Like, there is somewhat of a worry this might go bankrupt, go to zero. Now I got validation to this shelf offering. That's not going to happen at all. At all. Worst case for Jumia, it would just get acquired by someone who wants exposure in that region. So because of that, now I can like factor in Jumia being not just a 2% position. Maybe I can bump it up to a 3 to 4% position because I know they're going to survive. And also some caveat: they are incorporated in Germany. It's a lot more difficult to raise funds in international markets like that than it is in the US. A lot more difficult, like way longer. I don't know the loops, but it's just way longer. So maybe they didn't have the luxury of doing the shelf offering the $15 or $14 when it was trading a couple weeks ago, because it takes time. So I don't know what it is. Like, the management hasn't really talked about it much, but again, nothing has changed about Jumia's thesis than a month ago. This is a perfect example of how narrative follows stock price. People were gung-ho about Jumia a couple weeks ago, and it's trading $15. Like, oh, it's real. It's going to be the next Amazon of Africa. Like, this $1 billion company will turn to $10 billion really quickly. Now it's trading at $5, half the valuation, and people think it's going to go to zero. Nothing has changed, though. Like, not one thing has changed, except for maybe the trust issue if you got scarred by Jumia back then. But you, as an investor, you kind of have to like keep emotion out of it and look at the pure results and facts about a company. And the facts are, this is going to be a profitable company within the next year. It's totally different than the shitco company of Jumia 4 years ago. Different management. And I think now they're using these funds of diluting the shareholders to become aggressive, because in the past 2 years, all they've been doing is defensive, cutting SG&A costs, making sure they have minimal cash burn, cutting it half towards that profitability. But I think now management is saying, we actually are on the path to profitability a lot sooner than later. Let's get as much funds as possible right now so we can grow and capitalize on it. That's why I'm betting it's going to happen. Because of that, I double my position. And Os initially missed out on this massive run, and he got the opportunity to buy 2026 Sleeps. Like, I own 2026 Sleeps as well. I got in at $2.10 for the $5 strike. I think he beat me at $2. But again, I can promise you, I shouldn't promise. I'm like really confident that this is going to be above $7 in 2026.
Yeah, it's definitely there, man. The opportunity is there, and you already saw what the market is willing to do with it. So all it takes is a little more confidence, and boom, you're back up. Either way, this is way too much. Too much. That's too much. Doesn't make sense. Should not have gone 10-3, 10-4, whatever it was. Stupid. Overreaction, panic, fear. Again, as Shai's made a very good point. Look, so you see the market's red, you see a 5% drawdown, you panic and you sell. Again, refer back to all of the major crises and drawdowns in this market. Notice that we are currently still trading above every single one of those. So when the conviction's there, he's run his model through it, right? You've heard us talk about it for hours and hours and hours. If you have the foundational confidence to believe in the trade, you should have that. That should translate directly to what you do with your money. Here's the disconnect for most traders. Here's where most traders lose. Thesis, understanding, idea. That's one thing. What stock do I like? Why do I like it? What kind of trade am I going to take? Emotional state at the time of execution. If those two are not in sync, you will lose every time, even with the best trade ideas and the right range and everything else, because that panic will sift you out of the trade, which, again, remember, the market is manipulated not in your favor, but against your best interests, to shake you out of good positions at a good cost basis so that large-scale institutions can take your shares at a discount. It's kind of like getting to walk into Best Buy and saying, hey, you got 30% off whatever you can grab. I'm going right for the laptops. I don't know about you. They do the same thing. They go right for the good names that have the presented growth opportunity. And again, the model justifies it, backs it out. We've walked you through why it makes sense a million times. It's a matter of, it's already paid off to the tune of 300%. Question is, are you willing to jump into round two? And I think even more so, the question is like, did you have a plan going into that trade? And then the second part is, what was your emotional state at the time that you took the trade? Because I would guarantee that if you're saying I was calm, cool, collected, and following the plan, you made money. Or your losses were so limited they didn't matter. As he mentioned, it's a small 1 to 2% position. So if 1% of your portfolio, let's say it's 100 grand, 1% is $1,000. If you have $1,000 position that goes down 10%, you're down $100 on a 100K portfolio. Even that example applies if you have $1,000 in your portfolio. You have 10 $100 positions, right? And one of them goes down $10. Are you sitting there losing your shit? I don't think so. This is all about what's in here. We've already mapped out the plan, the execution. We give you everything, the roadmap. It is simply up to you to manage this, which I can't manage for you. He can't manage for you. No one can, not even your mother or wife, either way. But those are it. So on that note, let's get into it. Smash or pass. You post a ticker. We'll dive into it very quickly and give you the yay or nay, smash or pass, tell you whether or not it's time to go long and if the opportunity is actually a good one or a garbage one, which a lot of these are. So I want to save you from the fake gurus that have sold you a bill of goods on some of these shitcos and help you get into a much better way of living, followed by sound research that is backed up by both technicals, financials, and industry experience. When I say it that way, I feel like this stream should be like $1,000 a year. I mean, the amount of money you can make, dude, on every position is insane, but I think we're just too generous for that. So let's get into it. Cools, my guy, Sound Hound. This one was a pretty wild ride. As I understand it, Lee was crushing this on the day trade front. Ooh, I don't know anything about the fundamentals, but I will tell you this chart is tickling that spot in the back of my brain. So it looks like we had this one mapped out from 163 to 266. So we gave you the buy at some point at 169 and it ran to 10. So I gave you a 10X. You're welcome. And it looks like right now it's trading at about $5.16 with a clear base here at 393. Now the question is can it break up? It does look like it desires so. You got that little W pattern forming there. I can see that.
We can't see your screen.
Of course you can't. Oops a daisy. So again, I mapped this already out. I'm assuming from smash or pass one other time at 172. That was the buy at the base. 266. That was the trade. And again, continuation took you to $10 for a 10x return. So once again, you're welcome. And it looks like 461 is where this thing struggled in the past. So, yep, there it is right there. So I'd say over 461, you're golden. So that's an easy Momo trade.
I mean, fundamentally speaking, I think it's an unprofitable $2 billion company with no profitability in sight. So, like, I think, if I'm being frank, like I don't think this is gonna be a real company in 5, 7, 6 years. Like I think their product for like it was the AI support, AI voice, whatever they do for cars. Like I think it's duplicated pretty seamlessly for the bigger players. Like if they want to, they've had minimal revenue like explosion that you'd anticipate during this AI phase. Like I just think it's a niche that's gonna fade over time.
So technical smash, fundamental pass. Do with it what you will. How Met Aerospace. This was a Twitter suggestion by Venkat. I've never ever looked at this company ever in my life, but you can't argue with the chart. What a strong IPO. This you rarely see. Wow. Unbelievable.
Well, it is wild. Wow.
You don't see this in IPOs. Like you don't see that kind of strength typically.
Yeah, I mean, I can't speak to it, but the chart looks ridiculous.
That's nothing but climb, man. So you got a full, like this is what you'd consider the full extension. You can see the fibs don't even go any further. That would be considered full extension from IPO price. I think you'll get a better readout looking at it from this sell-off. But even then, the data is going to be hard to sift through because even then you still don't have much more upside. So again, this is going to come down to the fundamentals and earnings. I would say right now, just looking at the chart, quick view, your RSI. So basically your strength of buyer's trend is weakening, even though price has increased, which means fewer buyers are willing to come to this party at this point. So I think that's something to keep in mind, especially as it's testing all-time highs, that a correction and a base could be in the near future. I don't know if he had a minute to look up the fundamental aspects, but I would
I'm
say
looking at the
that
fundamentals for sure. I mean, something occurred in their business where they had massive earning expansion in the past 2 years. I can't speak to what, but it looks like it was a boom and it's going to slowly fade to normalization. So if that's the case and they can't continue whatever occurred, I don't know if it's an inflection point or whatnot, but I'd say pocket your gains. This is a massive like winner. Doesn't look like anything fundamentally speaking will change going forward. My rule of thumb is gross margins under 30%. I'm a no-go. This is 28%. So
yeah. So take what you can, leave the rest, pass it, but keep in touch in case you want to smash later. PayPal is one I'm following closely. We've kind of given you the breakdown of this one. If you're at the live event, you got a hell of an earning, or no, it was even earnings trade, but whatever that trade was that you ripped out live, that was a great trade from the base to the top side. This one is range mapped and range locked right now. You need to see a break over 70 before you see any relief at all. But
yeah, I mean, PayPal, again, like people who are live at the conference, they heard me like that was a sentiment changing quarter they just reported. Like they had transactional margins actually finally tick up and beat. That was the first time in a while. Like, funny enough, next couple of days, analysts kind of repeated what I just said. Like this is a sentiment changing quarter. This is actual the Braintree, which is their transactional margins, like picking back up. Who look out ahead. Issue is I still have my $70 strikes. I think it was $75 or $70 strikes. I think it's going to go up there still. It's just fintech is getting punished the past week or two with the 10-year yield going lower. Recession fears is clearly not good for fintech stocks because, again, people have less money. They can't Venmo each other, etc. So also business use is going to be a lot less with the recession. So PayPal is unfortunately hit that recession fear, but that earnings is reported was like, wow. That's a sentiment change. And if the recession fears fade away, I think this would be a big winner.
Yep. I couldn't agree more. So you got it. It's there you go. Put it in the chat. Smash tenderly, but watch carefully. You got a tight range. You got a very good limit with this. Below 57, this is a dead dog. So taking that risk now is fine because it's absolutely fixed. And I love that. Anytime I can find a fixed risk trade that I know has significant upside. So in this case, right, watching for a retest right here, 118, descending resistance right here of this channel puts you at about, 95 to 100. So you have $30 upside for what, $10 risk? 3-1. Sign me up. But again, I do think recession fears will hurt them. I also believe that they could have really capitalized better on the whole crypto situation. I think that was a big miss for them. I think they could have become a key player in crypto if they would have adapted more appropriately. Oh my God, I did not see what happened with Intel.
It's a dead it's not a dead company, sorry, it's a dinosaur company. I made that comment during our conference, like I forgot what I said. I just like don't do Intel. Like they missed out on a GPU. They're gonna get it in, but it's gonna be too late. We're not gonna revert back to CPUs. Like this is a perfect example of just they missed out on their opportunity multiple times.
Unbelievable. So Porter, are you at 10% position for a 10-year hold? Personally, I think there's better places to park that cash, but that's just me. So it's definitely getting a pass from me.
Pass. Yep.
All right, a girl and her fork. That makes me extremely hungry right now. That picture of brisket or whatever you got there. So cheers. Thanks for Rumble, the Donald Trump Select Supreme Company of the Future. Will it manage to earn its place in the landscape amongst the TikToks, Facebooks, the Instagrams?
It's a hard pass. I mean, it's trading at it's trading at 20 times like their revenue with only like mid-teen growth. Like, no, it's not even profitable. Like, there's just, I'd pass.
Keep in mind, you guys, with social media, it's think in terms of monopolies, and you can't cuck the Zuck, man. The meme spoke true to the man's existence. He has capitalized and shown that even though Facebook seems antiquated, he still owns your attention. And he has not made that an unknown item. Facebook's ad revenues are still, I would argue, have upside. At the end of the day, buyers are on Facebook because the people with money are over the age of 45. That's who's really got the spending power, especially in a difficult market. So what happens? Ad revenue floods to Facebook. The flash and pop Instagram buyers that are 20, 25, that have a little bit of mommy, daddy's money, maybe a little stimmy money, they're not buying as much as they once were. But Facebook is the go-to marketplace for digital products, and I don't think that'll change, especially as the world changes to a micro influencer platform wherein people with small followings will be able to monetize with more personalized, direct approach to education and product sales and all these other things. I think Facebook is just, Instagram acquisition was fucking brilliant. I don't know what they're going to do with WhatsApp, but either way, it's a unbelievable. And so I say all that to say, I don't think a platform like Rumble has any vantage point that can't easily be stomped on by some of the other players. And beyond that, I think the Trump fan base still is very Facebook loyal. And as a result, I don't see them leaving what is native. You got to keep in mind that we as people get very used to certain things, and we don't want to break our dependence or interrelationship of those things. And so we stay, and that's what you consider like the stickiness of a product. Uber is a great example. They made the rides very cheap. They paid the drivers very well until you were so used to taking Ubers that Uber became a verb. Now the rides are overpriced and the drivers are underpaid. But what are you going to do about it? The answer, nothing. We vote with our dollars every day. And most days, people vote with their dollars in the wrong direction against their best interests. That's why the stock market is the only place you can take advantage of what these companies are doing to take advantage of you. So moving on, I would say this one I've never, ever heard of as well. ALTG, Altismus, Alta Equipment Group. And oof, pass. Don't even care what they have going on because they IPO'd and the chart is dumped. And this thing needs to find a new bottom, which I don't think it's doing right now. Mara. Quick note on this. Any of the crypto-related plays, I just buy Bitcoin. So just an FYI. Middle of range, technically, don't like it at all. Downside trade to $3 maybe. Stocks Buddy agrees. You know when me and Stocks Buddy have the same pivot outlined that it is written. What are your thoughts on these? Garbage?
Just do spot. Honestly, use instead of miners, do some 2x leverage spot Bitcoin ETFs if you want more like alpha than Bitcoin itself. But like just do Bitcoin and Ethereum, Solana. I think everything else is just
It's fugazi, all of it. Wow, what the hell is this? ALAB? Is this a bio?
Oh, I love ALAB. I love it.
Looks like hell on earth.
Do you if you guys don't know what ALAB does, essentially I'm trying to think about they essentially for they make the data transfers capable for these hyper scale data centers. So the issue with that is like they have an 80% market share in, I'm trying to think what was the name of what they do. Starts with an R. I'm looking it up real quick.
This volume is very interesting right here.
Yeah.
Again, we talked about accumulation and no price movement. There it is right there.
So I did tell everyone, like, I think during the IPO, like I'd be interested in $35 to $40 for ALABs. Fundamentally, they're like, whoa, 40% plus Rule 40 score. They absolutely are necessary to improve like the speed and data transfers among the data centers for the big dogs. However, they already have an 80% market share. there is new competition via Broadcom and Marvell that might start eating up their market share, which hurts their margins, etc. But I think there's so much room for like all three to succeed. But it's a recent IPO. There's going to be a lockup period expiration. But what that means is the existing investors who participate in the IPO, they're going to be allowed to sell some shares. I don't know, 6 to 9 months post IPO. I think we're at that around that mark. So the heavy selling we're seeing, it could be them offloading the shares. Either way, I have a rule of thumb. I need 3 to 4 quarters of a new IPO to participate. That's why I haven't gone in. But like, I think it's an amazing company. That's an absolutely going to be part of the modern stack for data centers going forward that actually have a moat. It might be a competitive moat going forward.
There you have it. So you're actually getting a smash right now, Sir Gregory. And before I casted my judgment, I did not see that volume, and that does pique my interest very much so.
It's like they haven't. Here's a good example. I just pulled up my notes on Astera Labs because I do these write-ups all the time for the people who sign up to our newsletter. Right now, the Redimer, I'm probably butchering the name. The market's $360 billion. In the next 7 years, it's supposed to almost 10x to 5 billion. It's 362 million market share right now. It's going to turn to 5 to 6 billion by 2031. So if I'm saying that Astera Labs is an 80% market share right now, let's just say it slowly fades to 75%. So think about the amount of revenue they can make from that $6 billion market share. It's 75%. That's like, I don't know, $4.5–5 billion a year in revenue that they can get by 2031 with the margins they already have, which is a 20% free cash flow. Astera Labs, they're only, wow. Yeah. So they're worth $6 billion. I'm just telling you right now, by 2031, they're probably going to start making $4 billion in revenue with 20% free cash flow margin. So they're probably going to be pocketing $1 billion in free cash flow every single year, starting at 2031, and they're only worth $6 billion right now. So this is why I'm like absolutely bullish on a name like this that a lot of people don't really know about because it's a small cap name-ish, mid cap, new IPO. But if you have an 80% market share of something, you have a clear moat, absolute clear moat. I just don't know about the pricing power they're going to have because of Broadcom and Marvell, but this is one that I've been wanting to get in for a while. So maybe thanks for like whoever brought this up. Like I forgot about this name. I need to keep on my watch list. This is just me reading my notes from their IPO.
Yeah, and make sure you go to Shai's bio. That link's there. I just reposted it. That's how you get on that watch list, and you'll get that email with those deep dives directly to your inbox. We don't spam. We don't send you a bunch of bullshit. We simply send you more of what you're getting here, a little more thought out in terms of the information and detail we're able to provide. Latvian, which quick shout out to this guy. So you remember Latvian?
Oh, yeah.
So
he's the Buffett guy at the conference.
So he crushed. I mean, first of all, he made his weekly profit target while we were sitting there live. That was cool. But I do believe he has continued to do that day in, day out as he's left the event. So I love seeing that. What the hell is AROC?
AROC, never heard of it.
Never heard of it either. But this chart is a little spooky. Especially being up here. What's going on? Oof. It's been listed for quite a while. I do like this bottom feeder curl, but the buy here was below 10 or so. I don't really like it here. But I'd say above 18, 19 bucks, I'd say call it break even 19. Above 19, it looks pretty solid. But I don't know anything about the company.
I mean, it's a natural gas compression company, so it's in that kind of field.
Sounds really boring.
But boring can be great sometimes.
I know. So you're getting kind of an in-between. I don't know enough about the company to say it. I don't like commodities or energy or any of that nonsense, so it's not really my skill set. I think nor his. So, but technically speaking, above 19, yeah, you got upside. 27 definitely is on the table. Above that, you can go a hell of a lot higher. It's just a matter of will it. Nato Hurasave, Baba, of course. I would love to oblige, because this is one that I have a decent amount of money in and has had a decent couple days. So if you look here in the weekly chart, this thing has been brutal. It has been beaten down. You are forced to be at the mercy of the Chinese geopolitical nonsense. And as a result, we are stuck between 83 and 72, significant resistance at about 88. Should we break that, we're going to 150. So that's my take on the technical side. What do you like, Bob, or do you hate it?
Well, during the conference, during our fireside chat, what did I say was a Trump trade?
I agree.
And now Trump's odds are 46% winning. Kamala is like 52, 53. So you're seeing that Baba get re-rated because of worries of Trump becoming president. Now he's kind of the underdog. It's catching a bid because you have to factor that in now. Like if Trump's not president, like that's kind of bullish on China, where before it was bearish and Alibaba got destroyed for weeks. So it's catching a bid now. So I think that explains it.
Absolutely. Kieran, we already did Mara. If you just rewind the video, maybe 5-10 minutes, we knocked that one out already. So to answer your question, Neto, I hope I'm saying that right on Baba. For me, it's a smash. I think it's a pretty clear level here. Just below 70, I'm out. I'm just not willing to take the risk. I did buy this down to 62, 63 at times. But again, smash with the Democratic win because it's going to be pro-China. First female president, that will be interesting to see how people react to that. I could see it being a nothing burger presidency. Like, let's not really do much or shake things up. Let's just position, which I got to give them some credit. If they can pull this off on such a last minute kerfuffle, unless that was all engineered anyway,
it was engineered.
I'll be kind of impressed.
It was engineered. It was genius.
It was. Because now you're presenting this great opportunity. And again, Trump was very much so winning in the African-American vote. They have taken that from him because Trump was also starting to garner women 45 and up, typically probably because they're married to conservative husbands. You know, that's what I would assume. And so the views kind of are shaped by that because you don't typically see that kind of skew in that demo. But I think they captured both female and African-American vote with this. And it was, I don't know, it was a stroke of brilliance. I would have said Michelle Obama, I think, would have been the banger, but that's what I'm wondering. Are they using her? Interesting. We're going to go into it because why not? Are they using her as a warm-up for a Michelle Obama announcement in 2028?
The reason they spend like, I forgot what the figure was. They spent like 20 million, I think, recently on Kamala's campaigns. Like that's a dumpster fire of cash if it's just setting up for like Michelle Obama.
It's not, because you have to break through the archetypal. You have to break through the archetypal dissonance, or I guess not dissonance, resistance to a female president. And if you could do that with a female president that's also African American, right? You can then prove, because they'll make it go smooth as butter, so that no one, because you know people are just racist pieces of shit at the end of the day, and they just go, well, it's, or misogynist because she's a woman, or it's because she's a black woman, or whatever bullshit they come up with. If they can keep it easy peasy, they can sell both of those items off the ticket, and they can say, look, let's not just do 4 more years, let's do 8 more years under the wife of a president who was pretty universally loved by most people on both sides of the aisle. Regardless of what you think about what he did, right? I want to get into that, but it's my point is I think that could be brilliance in politics. I think that would be brilliant politics.
Well, it's all scripted, so it's all entertainment.
No, you have to break that archetypal resistance, though, to A, having a woman as president, and B, having a woman of color as president. I think those are 2 major sticking points that a lot of people won't never admit out loud, but have an issue with. One of my good friends, so he's a 35-year-old black dude running for a local thing. And we were just talking about it. It's like we're all born with these inherent like beliefs, and we're coming from this old world where everyone has a little bit of race. Don't act like you don't. The key is admitting I don't know, although I'm sure there's other ways that I just don't, I'm not even conscious of in my head that I don't want. But again, we are a product of our environment. And I think, you know, genetics load the gun, the environment pulls the trigger. So let's keep it moving. Costco, I don't even want to go into it because I gave that one to you at like 490. So you're welcome. That's already up and booming. Costco's a steady business, but I don't like to buy here. I like to buy when I got it at under 500. So you got the smash on that one. I would say be very careful now. One I do want to look at is Uber, because I haven't looked at this chart in forever, and I really don't know. Oh my Lord. Dude, look at that. Holy shit. That's some strength, dude. Why am I not buying Uber right now? Look at that, dude. That's not V-shaped. That's dad's home recovery. That's like, this is my market. You sit down. Look at that.
Why is my weekly Uber looks different than yours?
I don't know, dude.
I don't have a green candle in that dip. It's weird.
Are you on the weekly? You might not be.
I'm on the weekly. So weird. Yeah, I mean, Uber got scooped up. It's been a strong name. I don't know what happened.
Stocks buddy turned on?
No, let me turn my stocks buddy on.
This is where I fundamentally, I disagree with. Well, I guess I just see the move happening. Stocks buddy says pivot point 69. I agree, but I think this proves out enough that Uber could rip back to 90 from here.
Well, yeah, do you want? We can do another one trade that I just got into for everyone that everyone's been wanting to see. Went to catch this falling knife and it bounced perfectly. Should we share it or should we just do it for the? Should I save it for the newsletter next week?
So go in his bio, get in there, click that link. It's free. It's just an email. Pop in your email and you'll get it.
All right, so I should save it because it bounced. I'll send you a private DM. Us.
All right. Send it to me. It's a private Quench. Tammy, how you living? The OG herself. Tammy. Ooh. Yeah, hymns. This is one of yours, so I'll let you take this. I saw you talking about this. I don't know nothing about what they got going on. This is erection pills by mail, right?
Yeah, they have the not the real GLP ones, like the offset ones. I got into the stock below $10. I actually sold at like 22, 23 because their telehealth lead, I don't see that like maintaining. I really do think Amazon, what they're doing and what Amazon's doing right now on essentially in the healthcare space. If you have a Prime membership, you get all these discounts essentially to all these medications, prescriptions, like even potentially telehealth, like visits with your doctor. Like it's only going to enhance Amazon's moats. And if you're already paying for Prime, which everyone is paying for Prime already, like if you live in
my
the
wife
US,
were both paying for it for a period.
You just do. It's just you
ridiculous.
Have to. Why would you pay separately for Hims when you can just get a much cheaper value via Amazon? So because of that, I was like, I see their moats gone. I think they're going to be one to have a duopoly in the space, but not a monopoly anymore. And because of that, I think it's going to fade because they're also getting that GP1 bump, and that supply for the GLP-1s are going to normalize. And once it does, again, it's tricky because look at Teladoc. Like Teladoc's valuation for a telehealth company, it's a commodity telehealth. It is. Right now, Hims has the luxury of convenience and price. But if those two things are going to go away because of Amazon, they don't really have a moat. They're going to normalize towards their comp. And unfortunately, their comp is Teladoc. And that's like 60 to 70% lower valuation than Hims. So like that was my fear. I'm in the minority in this. I know I spoke on Space all the time on why I just don't see a long-term moat in this name. So I could be wrong. I want to go with Amazon. It just makes too much sense to get telehealth via Amazon because I already own Prime than to go through Hims separately.
Yeah. No, I couldn't agree more. And I would say on the chart, this is spooky. It's no good. It's no good. You got a base at 12, so you got $4 downside right now. I don't like it. I would say pass, unfortunately. Sayla, how you living? It's so interesting seeing so many of you now and here after I
I
actually
know.
know you.
TNT, Sailor, Latvia.
It's wired. It's wild, dude. All right, I skipped a few. Oh, with the Uber, I would say that's a smash, dude. That's a hard smash. I actually love that chart right now. Someone mentioned Trade Desk saying that the recovery was equally as good.
Yeah, I mean, again, this is like the moats outside the wall gardens for ad tech. It's Trade Desk, and again, I mentioned it. I think I actually mentioned it in a conference during my Q&A that CTV is the future. Linear TV is absolutely dead. We're seeing it right now in front of our eyes. All these bundles occurring. That's essentially the same price as cable, but like linear TV is dead. And if CTV is the future, which I think it is, and we're seeing that progress, Trade Desk is the biggest winner of that. And they have every single Netflix, Disney, HBO Max, like Prime. They're all creating these like ads packages. Like, oh, you want to pay for ads? Go for this cheaper version. That's going to be the normalization of the future for CTV. If that's the case, Trade Desk will be pocketing cash for it. It's also an election year. Again, Kamala just spent like $20-30 million on a campaign. Like, there's gonna be so much money being spent in the next couple months on this polarizing election where they're near even odds of who's gonna win. Trade Desk will benefit off that. They're just going to. So it's an inflection year in their business, and you saw that V-shaped recovery of like went from mid 70s to like almost touching $100 in a matter of weeks. So
they also put him in a corner. I realized he can't act with that same aggression toward a woman that he did with other men.
yeah,
Especially woman of color. Like, dude, that is brilliance. I got to give it to him, dude. Checkmate. I feel like that's impressive. I don't care which side you're on. I don't give a shit about either of them. It's all fugazi to me. It's nonsense, but I like the theater of it all. I really do enjoy it. The drama. That's wild. What a script, dude. I bet Lorne Michaels had something to do with that. Unbelievable. That'd be cool if your job was to script all of that stuff. I have a feeling that is someone's job. Oh, we're way over. It's been 90 minutes. All right. I love y'all. Stay blessed. Go in his link. Go in his bio. Stocks Heavy Shy on Twitter. Make sure you click it because that watch list is fire. And we're going to be now releasing slow drip, some of these independent picks with a little bit more detail that are set to make you money. You saw JMIA run 300%. You better not miss the next one. You better not miss the next one. I love y'all. Stay blessed now. Bye-bye.